Hello, everyone. Welcome back to the MHP Show podcast. I'm your host, Derek Vickers. And on the MHP Show, we talk about this interesting and crazy world of mobile home park investing, trailer park investing, manufactured housing community investing, whatever you would like to call it. And we talk about that stuff on the MHP Show, anything from operations to, dealing with tenants and all of the above. And before we get started, I'd like for you all to go and check out. I did a webinar that shows you the basics and teaches you the basics of mobile home park investing. So that link will be in the show notes. It's absolutely free. And you can get our free deal calculator. There's a coupon code in there. You can get that for free. We usually charge for that. But if you listened this week, we will throw that in there. So without further ado, I got another guest with me today, because I like having guests on because, I get to talking and maybe people don't like listening to me the whole time. So I have guests on. So this week I have Mr. Shawn Dwyer with me. He has 19 years of experience in corporate America, and still in that, you're still working in corporate America, correct?
Absolutely. Yeah, 100%.
Got it. And he loves real estate and is an investor in mobile home parks. So, Shawn, welcome to the show.
Awesome. Appreciate the time, Derek. Thanks for having me on as a guest.
Yeah, man. So I know my brief, kind of bio there doesn't do it any justice of what you do and your skill sets, and I know you've accomplished a lot. So just give us a quick background of what you've done and what you're doing now and what led you into mobile home parks.
Sure thing. Yeah, so like you mentioned, I'm still at my Fortune Top 30 corporate gig. I'm an executive at a large telecommunications company. Been there almost 19 years, or almost 20 years, 19 years now. So started way back right as I graduated from college, and did the typical thing of finding a great corporate job, working for a great company, great benefits, not only financial but also healthcare, 401k, all the things that the check boxes that we're always told to go and take a look at. So I did that for many, many years, went through the stock market crash and back in 08, 09. Wasn't a big deal then. I didn't have too big of a nest egg, and I had a long runway to retirement. And then, your 401k drops by about a third over a couple of years, which again, not a big deal because I could just buy a bunch of stocks that were on sale, and I still have another 30 or 40 years for it to continue to grow. And then COVID hit, and the same thing happened, but over like a 2 or 3 month period, which got me pretty scared because I had all of my retirement savings and everything that I was banking on for retirement just in one vehicle, right? So that got me a little scared. If I was ready to retire at that point and I was 65, 70 years old, and a third of my net worth was just wiped away, what do you do at that point? Do you continue working for another 2, 3, 5, 10 years to try to recover that money? So for me, I started doing a lot of active engagement of reading books, listening to podcasts, and just seeing what else was out there to invest. Initially I was thinking more of just investing passively, just as a LP, or buying a single family home here or a townhome there, and just letting it ride out for 20 or 30 years. Then I started hearing more about commercial real estate and syndications and what could really be done. So during COVID, it really set me on a different path. So still love my corporate job, love my team, love my company, love what I do on a day-to-day basis. That's why I'm still there. But just again, developing something on the side, just as semi-active, half passive income that's there just as a separate retirement vehicle.
Yeah, and that's awesome. And we kind of have a similar story, and it's interesting how, I've interviewed a ton of people on here, and I don't want to say all of them, but there has been kind of an overwhelming number of people that got started in 2020. Like COVID was the thing that pushed me to get started. Sounds like it was something that pushed you. And I know I don't know how many, but I know we've interviewed numerous guests that started around the same time. And it's interesting how, sometimes it takes an event like that to give us that push, because I had wanted to invest in real estate for, I don't know, a while. And 2020, it took my corporate sales gig getting slashed in revenue to do that. So, you're still working your corporate gig right now. And I talk to people all the time, and they think they use that sort of as an excuse to not get started. What would you say to somebody who's like, oh, I can't get started because I still have a 9 to 5 job? What would you say to that, Shawn?
Yeah, I mean, we all have 24 hours in a day. You sleep approximately 8, so it's you have to figure out what to do with the rest of your time. For them, I would say, how much time are you spending sitting watching sports, watching Netflix, watching series, sitting on the couch? If you really are passionate about something, you will find a way to make it work, whether it's sending out direct mail communications, trying to network with people nights, weekends, just trying to get a hold of people, doing cold calls, reaching out to brokers. There's small little things that you could do on a daily basis that will lead to getting into the mobile home park space. There's pros and cons that everyone has with getting into the space. Some people have a ton of money but no free time, so they may be great at LP ownership. There's other people that might be really new to the industry, maybe new in their careers, and have a lot more free time because they don't have kids or family. So they can spend all nights, all weekends just cold calling, networking with people. So it depends on how you can leverage whatever your specific skill sets and whatever your advantages are. I know you've had Ryan Nars on here, and he did a lot of cold calling, quit his corporate job, and then just went into it full time. So he took a pretty big pay cut. But for him, he was able to accelerate and spend all that time cold calling and networking with people, where a lot of people wouldn't do that, myself included. I wouldn't just quit my corporate gig and then go try to find something to purchase, manage, operate at that particular time. So, for me, it's how much time are you willing to put in right now to throw that gasoline on the fire to get you where you want to be.
Yeah, and that's a great point, Shawn, because you're right. People want to do it, but when it comes to turning off the game, turning off Netflix, or sitting on the couch, you hit it right. And people don't like to hear that. People don't like to hear that because they're like, I got to have my time. Right. And I get that. And you should have your time, but also you can't complain about not, getting where you want to go if you're not willing to do that. So for me, it was, I still had to really put a lot of energy into my, sales gig. So my thing, it was, I wasn't going to sacrifice time with the family. Wasn't going to do that. Wasn't going to sacrifice that gig. Wasn't going to sacrifice the gym in the morning. So the only thing I had to sacrifice was sleep. And I was willing to give up, a few hours of sleep if I had to. Didn't have to every night, but there were some nights that were longer. But you're right, man. There's just people that aren't willing to make that sacrifice. And you can, because if you are cognizant of your time, you do waste a lot of time during the day. I'm cognizant of my time, and I waste time. How do you manage your time, Shawn?
Sure. I use time blocking. So for me, I'm out the door, I'm at the gym a couple times a week at 5 a.m. So for me, I'm at the gym working out 45 minutes, and I'm at work, my normal W-2 job at like 6:15 in the morning, starting my day. So before, I have 2.5 to 3 hours before most people roll into the office, average jobs, and I'm already a third of 3 hours of my day in. So that's how I manage my time to get everything that I need to get done. Personal working out, making sure that I can get to the office, get all my day job stuff done, and then I have to get my kids off the bus maybe like 4:30, and then take them to activities and stuff. So when they're at their activities, I can do personal work because it's nighttime. Still kind of spending time with the family, taking them to and from activities, but I get to answer all my emails and do all my connecting, cold calling, networking with people during that time.
Yeah. And that's, the time blocking. And, it's interesting that you say that because, we've heard, obviously people have heard that before, but people don't do it. And, it's not actually that easy to do. You can block out your day, but you still have to have the discipline to stop one thing at 3 and start the next thing at 4. Am I right about that?
Absolutely. Yeah. I mean, there's so many books that are written about it, and they all talk about pretty much the same thing. As it's the one book, The One Thing. That's another great book that I brought to my team, and we did some training classes on it. That they talk about time blocking. They talk about what was like the one thing that if you accomplished it, made everything else easier, or just not needed or not required. So if people are looking to get in the space, what's the one thing that you could do today? Could you start making a list? Could you start developing your requirements on the parks that you're looking for, the size, the public utilities, the location? Okay, now you have your list. Can you call 2 of them? Can you call 1 of them? Just to get started on something, get the ball rolling, just get your fears and overcoming those, and then call 5 people and then 10 people, and then start to build a relationship with 1 person. Maybe you buy their community, maybe you don't. Maybe they have a friend or a relative that lives somewhere else that's looking to sell. You never know where it's going to go.
Yeah, yeah, dude, I love that, Shawn, because that's how much money does it cost you to do that?
During marketing a little bit, but for cold calling, you already have a cell phone. If you're not
Right.
using VAs, you can look at their park numbers. If it's a mom and pop, they're probably going to answer the phone because it might even be their home number.
Yeah, and my point being is that 98% of that stuff you said doesn't cost any money. So here
Yeah.
we're killing the limiting belief of, oh, I have a 9 to 5 job, I can't do it. And oh, I don't have any money to do any of this. Well, most of the things that you do don't require any money. Okay. And I promise you, if you find a great deal and you bring it to me, you bring it to Shawn, I'm sure we would be more than happy to partner with you, or maybe there's somebody else that we know that might partner with you. So we've killed 2 beliefs right there in the beginning. So moving on here, Shawn. So with last year being with rates being a bloodbath last year, I mean, I looked at so many deals and so many of them did not work. It was tough. But why do you think now is a good time to invest?
Yeah, so I look at it a couple different ways. So interest rates historically have always been right around this number. So over in 2020, 2021, going into 22, we were blessed at having interest rates at 3.5%, where you could buy properties, make cash flow look a little bit easier. So when you look at it today, for a Fannie Freddie loan, you're looking at 6.5%, give or take, depending on what's happening in the market right now. So if rates go up, you can lock it in for 5 to 10 years if you have a good quality asset, and you look like a genius because you bought it at a 6.5% interest rate. And if you buy it now and it drops to 5.5 in a couple years, you can refi out and get a better value for your property and do a cash out refinance and put more money back in your pocket as well as your investors. So I still think real estate works. You just need to find a creative way to either get the seller to lower the purchase price, maybe do some seller financing, or look at their operations and see if there's any way to increase value for the residents. The easiest one is obviously doing lot rent increases, but is there any additional spare land on there? Could you do home sales? Is there some operations that you own another park or community in the area? You can leverage your existing contractor base or your manager base so you don't have that expense. There's a couple different ways you can get creative, but yeah, we're still looking at deals. Haven't really run into anything on market that we're really liking. We came pretty close to a couple, but unfortunately, some other operators paid a little bit more than we were willing.
Yeah, yeah. And there's deals out there for sure. I mean, like I said, last year was like, every deal I looked at was like an absolute no, pretty much. But this year the market is softening up a little bit. I do see some sellers coming to reality. Some is the key word there. So I think there's going to be some opportunities coming up. And just to piggyback on what Shawn said, there's like, if you don't buy it now, it's probably not going to be cheaper in 3 years. It's probably not going to be cheaper in 6 years. And so if you can find a deal that pencils and works and hits all the metrics that you're looking for, there's no reason why you shouldn't take advantage of it right now. Because in my opinion, I think rates are probably going to stay relative where they're at, whether they give, a quarter of a point or something. Where do you think that we're going to be in a year or two, Shawn? You think rates are still going to be the same, higher, lower?
I don't see anything changing here in 24 because we have the election coming up towards the end of the year. I'm not expecting them to really adjust anything, and if they do, it's going to be minor little rate cuts. As we get into the administration for next year, it still seems like inflation. They're not including housing, food into those numbers, so I still think it's a little bit hotter than they're projecting, and what they're currently reporting. So I don't see them cutting it anytime soon. Maybe mid 2025, you can see like a little bit of a rate cut. But the deltas and gaps of what you historically have seen, there's still a little bit of wiggle room there. So you might see a little bit of compression, but that wouldn't necessarily be due to rate cuts. That would just be more inline market, like everything just calming down a little bit.
Yeah. Yeah. And I've still seen people now, like they're paying, they're still paying 5 caps for deals.
Yeah,
Um, I've still been seeing that. And I think with the increased, there's more people actually looking at this asset class, and especially the bigger stuff. I mean, I don't see the cap rates on those deals moving that much at all. And then even if we had, if a bank or a broker calls you and says, "Hey, Shawn, I've got a deal 75 cents on the dollar." You're like, "Okay, I'll put it under contract." Then they call me and say, "Hey, we've got this deal 75 cents on the dollar." And I'm like, "I'll put it under contract for 80." Then they send it to somebody else and and so then we end up back at the same
sure.
number, right?
Absolutely.
Um, and so I still, I don't foresee there's going to be this big crash in mobile home park prices because the rents are still artificially low, and I still think we have some runway um, on in that regard. So I'd be curious on your opinion of that. Like, where do you see values going in the next 5 or 10 years?
I still see them increasing. We've had some operators purchase pretty close to where I live, pretty large institutionally sized parks, and they dramatically increased the lot rent. So they went up. One property we were looking at to purchase, they increased it by $250 per month. So it was right
Mhm.
around, I think it was 450, 470, and then they increased it $250 right out of the gate. So on paper, that park's worth a lot more. I personally wouldn't have done that. But the folks who purchased that was their part of their business plan, and that's what they did, and that's how they justified the price that they paid. So I think lot rents are going to definitely keep increasing, but it's going to be situations like that that get a little more press and a little bit more speculation and oversight from potentially oversight committees and put in rent. Um, what do they call them? Rent caps, right?
Yep.
So I definitely see that happening in the future if you have operators that come in and dramatically start increasing lot rents like right out of the gate without adding a ton of value to the residents within the community.
Yeah, for sure, for sure. And so, looking to, your company, explain to me like what you guys do exactly.
Sure. So again, I'm partnering with Julio Jaramillo out of Evergreen Communities. So he has over 30 years of experience in the industry. So he loves to bring value to the residents, right? So he's not going to come in, and I believe the same thing. I want to look at myself in the mirror every day when I shave and be completely fine with everything that I'm doing within the community and be proud to own and operate that community. So we will do rent increases, but it's also adding value to the residents. So it's doing a lot of landscaping, tree trimming, putting in brand new driveways when needed or required, doing street updates, maintaining water systems and sewer systems to make sure that everything is operating properly. Good water pressure for the residents to really add that value for when you are doing not substantial lot rent increases, but more than just like a 2 or 3% increase.
Yeah. Yeah. And that's important. I think that's, we're always going in and paving the road. Some of the same stuff that you guys doing, aesthetically improving the park. So people, when they drive in, they're like, oh, okay, I feel good about living here now. Like we can, we've even gone in and, parks we purchased and that are tenant owned. We've even skirted or painted and sided the tenant owned homes for the residents.
Wow.
And so anything to actually improve, the aesthetics of the park, I think is huge. And the residents, they like that. So, are you guys doing syndications? Are you buying deals yourself or just with Julio, or how are you?
Yeah, so we're doing joint venture deals with Julio out of Evergreen. So all of them are through syndication. So we bring in friends, family members, business professionals that we've met, and help take down the deals and provide that value to them as well. So we're looking typically at like a 7+% cash on cash return for the first year. We're not looking to do quick fix and flips and return your money after 2, 3, 4 years. We ultimately want to own these properties 20 plus years. So we're looking to be those long-term hold investors. So people that are looking to multiply their capital really quick and find the next thing, they're not the right people for us. But if you want to park your money for 20 plus years and continually earn more cash on cash return, plus doing cash out refinances when we can, when the debt market makes sense. They're the type of folks that we're looking for.
Yeah, yeah, for sure. And that's the same with us. That's what we like to do as well. We don't like to do fix and flips. I mean, I guess it's not an absolute. If I buy a deal this year and someone comes and offers me, a 3.5 cap, yeah, probably just take it. We did a lot of work here. Let's move on, guys. Let's return to the investors,
Sure.
right?
It's hard to turn it.
Be hard to turn that down. Be hard to turn that down. But I think that's great. And so how much, because I think, we haven't talked about this a lot on the show. Like, so for somebody that I've talked to people, when I, share with them like about our deals and what we're doing and how they can get in and be a part of an asset. They're like, oh, I didn't know that I didn't need that much money to get in. They think you need millions of dollars. So how much money does someone need to actually start and get invested in a deal?
Sure. So the minimum that we have that are required for our LP investors is $50K. We've had people that are part of larger funds and they put in $250K plus. They said, we love your guys' communication style, what you're doing for the residents, and for the next 3 properties that you're purchasing, we want to be in for $250K. That's right out of the gate.
Yeah, yeah, and I think that's great because, like when we close a deal, we always have a few people in there that have never owned real estate, just people that I know. They've got great jobs, they make good money, and it's almost like a change that they get. Like, hey, you're actually an owner in this property now. You're going to get cash flow, and you're going to get a piece of the appreciation when that goes up. I love doing that for people because, I was in that position before, and I probably would have never done it maybe I would have passively at some point, but some people just don't have the knowledge. So it's good that you're sharing that. And I think more people need to get involved with that because you were talking about your 401k earlier. I don't trust the stock market. That's just me. But I think more people need to get involved in syndications.
Agreed. Yeah. Every friend, family member that I talk to, walk them through it. They're like, wait, so you give me, or I'll give you money now. You give me a rate of return of 6, 7, 8%, whatever the first year. That keeps increasing because you're doing lot rent increases, you're moving in homes, you're beautifying the area. And then it keeps increasing after a period of time. And then your business plan is you give me my money back in, say, 4 to 7 years, whatever makes sense. And then I own it forever. And you just keep giving me money like a dividend. It's like, yeah, it's pretty much how it works. They're like, it doesn't make sense. I don't get it. And I'll just like map it out. I'll show them our perspective that we did. And they're like, okay, this makes sense. And then I'll let them talk to other friends and family members. And then they're like, yeah, this is what we do. We get quarterly distributions and here's the amount and here's, the communications that they give us. And they're just like baffled that this is even possible.
Yeah. Yeah, no, for sure. I've had the same experience. How often do you guys usually communicate to your investors?
Sure. So I live relatively close to most of my investors. So we're sending, I'll see them at like sporting events and school events and parties and all that stuff. So I'm talking with them very frequently. But for newsletters and stuff, it'll be on a quarterly basis. We'll send updates if there's anything major that we have going on at the property. For the most part, the community that we purchased is pretty stable. There's not a lot of uplift that we had to do with it. So for that one, it's more of 6 months or a year on what we're doing and what we're providing out. And then on a quarterly basis, we'll send any sort of major milestones or updates that we have for what we did at the community.
Yeah, that's great. That's great. Yeah, communication is important. That's like, I can't, if you're looking to start a syndication, you're raising money from people, communicate, over communicate if you have to, because that gives people more confidence and assurance in you. And I think Shawn would agree with that. But I'd be curious on your opinion, Shawn, like if there's, we have listeners that vary from, the beginner all the way up to somebody who owns, multiple deals. What would you say to someone that's maybe like, okay, I've got a couple deals, or hey, I'm doing my first deal and I'm going to go syndicate a deal and put that together? What are a couple things or one thing or whatever you come up with? What should they look out for and make sure that they have, in line and done correctly? Does that make sense?
So as the GP or potential LP?
As the GP.
Okay. Yeah, just making sure that you understand attorney wise of what you're projecting out there and what you're saying that you're going to do versus what the actual syndication is not only like structured to do, but also what you're forecasted. Like, does your debt and your business plan kind of match up? So if you're saying that you're going to do a cash out refi in years 3 for 5, but you're getting 10-year fixed rate agency debt, that doesn't necessarily jive and match up.
Right. Yeah. Okay. Well, yeah, Shawn, is there anything else that you would like to leave our listeners with before we sign off here?
Absolutely. So, for all of your listeners, spend some time really thinking about what you're going to be doing in retirement. If you think about how much time we spend and effort and energy we spend on planning our next vacation, buying a car, but do you spend even a fraction of that time thinking about your retirement? What are you getting for your investment, your return? What does your compound interest look like for that investment? How much of that money is actually being taken by those fund owners, regardless if it goes up or goes down? If your fees are 0.5%, 1%, 2%, doesn't sound like much, but as that compounds over about 30 to 40 years, that is a huge number. I'm a huge Excel nerd, so I developed a little tool calculator, which I can send to any of your listeners if they're interested. Feel free to email me. And you put in maybe 5 to 7 pieces of information, your existing starting balance for 401k, how much you're putting in there, your company match, and then what your fees are associated with it. And then from there, it shows you over the course of the next 30 or 40 years, how much of your 401k savings are essentially being ripped away from you for that like small 1% fee that the large institutional funds are charging you to have your 401k funds with them. So just spend a lot more time thinking about your retirement, what you plan on doing, and then where your money is going to be coming from.
Yeah, yeah, and that's great advice, because you're right. Not a lot of people even do that. I mean, I know people that I've talked to. How's your 401k? Oh, I don't even look at it because it's oh, and I'm like, oh my gosh. Do you have money in a 401k?
Right now, I do, yeah, because that's tied with my current employer. So yeah, I can't really invest in anything else with him. But yeah, if you change jobs, change companies, you can move that money into an IRA and start investing in real estate with it. But yeah, if your current company that you have your 401k with, depending on the plans and prospectus, you likely can't use that for real estate. But if you do ever switch jobs, you can switch it over to an IRA and start using those funds in retirement to invest in mobile home parks, self storage, RV parks, whatever you want.
Yeah, yeah. And are you guys buying anything else? Are you guys buying RV parks too?
We look at RV parks. They're a little bit of a challenge right now. I just don't have the time during the day to manage those and be part of those. So it is an asset class that Julio does own a couple in Florida and New Hampshire area, and they do great for cash on cash returns. And the operations piece is the only thing that I can't get into right now. But yeah, that's an asset class I definitely want to get into in future, whether that be 5-10 years from now.
Yeah, cool. Well, Shawn, I appreciate you coming on the show, man. So how can people get in touch with you?
Absolutely. So yeah, check out my website, goldenoakrei.com. From there, you can book a call with me. Like I said, you could email me and I can send you over that retirement calculator just to show you how much you're spending on fees and how much that is ultimately eroding in your 401k nest egg.
Cool. Well, thanks, Shawn, for coming on the MHP show. And we have new episodes every week. Please like and subscribe on iTunes, Spotify, YouTube. Go check us out. Check out the YouTube channel. We post all kinds of stuff there, and we will see you all next week. Peace.